So, good evening to all. To this online incubation program where we have landed up to the 11th week and just left out with one more week to actually end up this online incubation program. And today we have a very eminent speaker. She is not new to us. She had been in our this online incubation for earlier session too. And in the past also she was there during our one of the program where we were talking about how to encourage women previously in the year of 2021. So today we have an eminent speaker, CA Jamuna Shukla. She is born in Bombay and born and brought up in Bombay. Although then her schools and learnings were there in city of Varanasi, and she did education for BCom from Bombay University, CA from Mumbai, and did DISA course from ICAI. More or less, Jamuna ji is also eminent speaker and eminent panelist in the ICAI board. She is actually faculty member for ICAI board for Varanasi also, and she is also a faculty member of other zones also, whichever is coming under the ICAI. One good thing I would like to actually tell about Jamuna ji is she is only the first woman. She is the first woman from Varanasi who's been trained or who's been actually created as a CA in Uttar Pradesh, of course. It's not only for the Varanasi, it's a credit to her for Uttar Pradesh too. Secondly, she is the founder trustee of Varun Seva Trust. She is a member of National Executive Committee for All India Federation of Tax Practitioners since 2021. And going across the globes, covering each and every sectors, each and every divisions in India. And of course, some honors I would like to actually recall or would like to say about her. That is, she has been recognized by Honorable Prime Minister Sri Narendra Modi ji for plantation and environment activities. Best Zone Secretary for All India Federation of Tax Practitioners. She won Nari Shakti Samman, Vasni Samman, and Rani Lakshmi Samman by Subhani Banaras Kashi. She also been honored by Kashi Kohinoor Samman, Kashi Gaurav Alankan Samman, Jalraj Samman by Gapsam and Dainik Jagran. Have been honored by Nari Samman by Udgam Foundation in year 2016. Honored by Bharat Vikas Parishad also for her distinguished services to the social cause in the year 2014. Honored by AFTEP, ICAI Rotary Varanasi for many other contributions which she keeps on doing. And of course, she have won a UP Gaurav Samman also and Sarvshrestha Sakha Samman in the leadership of Bharat Vikas Parishad for year 2015-16. Not taking much of the time, she is there with us and she will be actually delivering us the session for the startups and for the newcomers or for the incubators or those who are actually learning with our platform how to, of course, prepare themselves whenever they are need to prepare for a working capital. Once they are with their establishments or once they are with their entities, there is a need of those working capitals to be actually managed and to be worked on. And for that reason, Jamuna Shukla ji will be actually taking on the today's session. And one thing I need to add here, if you have any of the doubts, any of the doubts are there, please let us know, because this is only the assignment given to all the learners also. The same assignment is been given. Even the format is also been given, but still, because of technical jargon or technical terminology is being used, I don't feel that Naji will be actually explaining on those things. We too have done the same in the past, but if it's called, in case any of the queries are there, please let us know by the chat. Over to you, Jamuna ji. Please, you can conclude. You can actually start the session.
Thank you so much, Pradeep ji, for uttering so nice words for me. In fact, I'm not that great, and I'm only a being first lady CA practitioner in Varanasi, not of UP, but you have given so many high designations and all. Actually, I am really a very simple and very humble person, and thank you for again describing me as much, but it's all very simple. Like we all are there, like Arpita ji is there, like you are there. We are all working for society as well as for ourselves. And thank you, Roots to Bloom and Atmanirbhar Bharat Learning Program, online incubation program for women and girls. Really, when I see the women and girls, it gives me little extra energy to participate. And see, Arpita ji is so much enthusiast, always ready to work for women and girls. So I'm also so. That's why we are here all together. And today's topic you have, what we have selected is finance with understanding of working capital. Now I'm coming to my topic. Before that, let me first share my this PPT. Then my support system will, I can release him. Okay, thank you. Thank you. Down is same. Okay. So Pradeep ji, actually, I was just briefed that especially I have to talk with reference to spice industry, but it can be relevant to any industry. And the topic is especially with what I was briefed was to explain what is working capital and how to deal with it. So far as I know, with as per our discussion, that you have already taken up everything, the basic details, how to establish the this industry and what are all needed, what is its data regarding market analysis, and everything has already been taken earlier by yourself or some other speaker might have taken. I will request you that whenever you will be posting this on YouTube, na, you just give link of that also, or that PPT what you have shared to me, because that will help a great way to the readers or whoever will listen this. So to continue with spice industry very briefly, again I have given some lines for this industry. Like I would just read it because this will help to understand further how to deal, how these are all really helpful to make project report and to understand our working capital. So we all know it is already explained, dear students. First, I also extend my greetings to dear students. I don't know, I can't see your faces, but welcome to you all. And now you all know that India is said to be home of spice, means largest consumer. First of all, we ourselves consume so much spices, and as well as we have great market in India, within India, and exports also. I think we are highest, Pradeep ji. I think data's export ka overall I don't have, but somewhere in your paper only I had read that we are largest exporter also. And out of this ISO study says that out of 109 spices, 75 spices are produced in India. So that way also we can see we are crossing the more than 60% of the spices variety. There are so many variety because in spices we have to understand that there are many spices which are more consumed in India and produced also. But there are many spices like balance 30 spices, I can say, they are more consumed otherwise in other countries. So we have to always, before going to any production or anything, we should always detail it, analyze everything in detail. What is the market, what is the production, what is the market, and who are the consumers for this, whether it will be beneficial for export or in our regional market should be captured. So you have to make study and analysis of this, and it has all been covered in his earlier research paper that I had seen. So it is very nice. Do go through that, then listen to this one also. What else is there? There is always a constant demand for spices all over India. Is to there, we never cook without spice, but gradually our food and our people are going out, and that way also there is heavy demand. It is increasing day by day for our spices as well as the spices consumed all over globally. And the in terms of tonnage, It was in I haven't mentioned over here in terms of tonnage. There was in 2016 merely 65 tons of spices was grown, but 107 lakh tons is grown in the year of 2021. You just imagine, means more than 33% jump is there. Now, total market also reached, as per August data 21, there was on Google. This figure took from Google. 70,000 crore business is there, means in rupees term, means it is an export. I don't know, export is not included in this, or Pradeep ji, you may correct me here ki what is the exact figure in rupees, ki what is the business overall we can capture for, and it is going increasing day by day in percent. 19% jump is there this year from last year. So we have to understand it, there is constant increase in the export as well as local as well as export of this spices. So it is very alluring field, one should go into this. Now what all we need to start this business is, in very short I would like to mention that we need licenses with registration in respective offices, Udyog Aadhaar, MSME registration, Udyam registration.government.in is there, FSS, FSI, what we say, Food Safety and Standard Authority of India, what we call for standardization of products. And import export, if you are in the import export business, then you have to take IEC code also. These are some basic registration I wanted to mention. One second, and this let me. This is taking up my. One second, sorry. Am I visible?
Yeah, you are.
Okay. Now, what machines, very a gross idea I'm giving, what machines we require to start this business is, machines required are grinding machine, impact pulverizer, double stage pulverizer, hammer mill, spike mills, etc., you know, but always have a detailed study before going to this. This is all gross idea. I'm not able to just jump up also. One second. Little technical problem. Very sorry, I'm not able to just go on the next page.
Okay, ma'am. What you can do is you can actually close it from there and then move it forward. Again, reopen it. Try to close it.
Stop sharing. Then again, share screen.
By the time, as per the Silk Board of India, what is the export as per
Yes.
say for Indian spices? I'm just giving a data. In financial year 2020, the spices were rupees US $3.62 billion was there exported from India. Top importers of Indian spices in financial year 2021 were US, UAE, UK, Hong Kong, Australia, and Canada. You can see how our spices are going around across the globe. The total spices export was somewhere $1.68 billion, US billion dollar in April 2021 to August 2021, and for August 2021 to it was US $312.57 billion. So the total spices export in financial year was somewhere around US $4 billion, and for the month of March 2021 it was 447.77 million. So this is the data actually per se for what exactly the spices are and what for India is actually accounting for across the globe for export of Indian spices. If you see which one is more into which spices are more in demand, if I say during year 2019, Indian chili export stood at 4,68,500 tons. Coming cumin export was 1,80,300 tons, and turmeric export was 1,33,600 tons. And likewise, cardamom large export was 860 tons. So these are the four
Yeah.
other materials in regard to the spices which are more into accountable whenever we talk about the export of Indian spices. And this data which I am actually sharing it here is as per the data from Spices Board of India. That
Yes.
is headquarters is in Bangalore.
Thank you so much. Thank you. This will help to our listeners very well, because they will have to understand ki what for they should, what line, what.
Why we are talking why we are
Yeah.
talking about this particular industry more?
Yeah. Yeah. See, now to continue with, thank you, Pradeep ji, for assisting all that with data. Now, second thing, what I was to continue the various expenses involved. Machinery, I told. The various expenses involved are raw material. We all know to start any business, we need raw material, labeling, packing, electricity, labor, sales and marketing expenses, administrative expenses, etc. We all know these are all general kind of expenses, but there may be some specific means in that. Suppose I talk about packing, then packing you have to understand ki we need costly packing for export, little less costly for our within India export. So we have to understand. Okay, now we come to this is the gross idea about how to go for. And now I think you have suppose decided to I have to go for some production of spice. It may be haldi powder, it may be dhania powder, or combination sabji masalas, tea masalas, many varieties are there. You have to understand it. You have to just make survey of this, analysis of this, and data just Pradeep ji told. Accordingly, you may decide. Now, we have to suppose to start a business, we need funds. We may have our fund, but that is always not sufficient. Always we have to borrow funds. It is well and good if you have your own fund, but it normally doesn't happen. We have to borrow. For that, we have to seek finance from bankers, or from anybody can finance it. It is up to you how you deal with it. And for that, if you are going to for finance to financial institution, that may be banks, NBFC, even private financiers are there, they may also finance you. Then they need project report. So what is exactly project report? What it contains? It contains analysis before. See, the contents of project report means you have to mention over there everything, why, how, what knowledge you have about the business, why you thought of this business, and how you will sell it, how you will procure raw material, and what profit you will make, how you will survive your business. That is very important. It is all to be mentioned in that project report. So analysis of the market, plant and machinery, what these are the contents you have to mention. Raw materials, direct expenses, indirect expenses, overheads, investments. I think direct expenses is clear to everyone. Expenses which are related to production. See, we have many expenses, but directly related to production is like labor charges, like electricity bill and all. So power and labor charges are normally direct expenses. And indirect expenses may, there are many heads. It will come again little later. Overheads are also kind of expenditure only. They are fixed. Like suppose you install 10 kVA electricity, to fixed charges are there. They always be there whether you produce or not. So we call them as overheads. And we may have some investments also. It is not, it is just to be mentioned if you have any investment. Fine. And now, what is the format of our project report? See here, now, here we have to mention, if you are preparing project report, about details of your units, mail ID, address, phone number, etc. You have to on front page, as usual, we write it. As anywhere we give any paper, we just introduce ourselves with our IDs and address. Then total project cost. This is important now. Financial aspect is now total project cost. How we have to display it. Now, project, suppose, see my cursor is there. I have mentioned is here in point A, capital investment. Capital means one-time investment. Once, like land, suppose you have land and building, it is one-time expenditure, but you can also take it on lease. So here I have written lease, just to understand it. You can have your own land also, building also. You may incur, if you have that much money, if you don't want to take it on rent. I have assumed, my assumption over here is that I have taken on lease. Then civil and development, civil and development expenditure. To install machinery, you need some civil works and all, wiring works and all, that is one time cost. Then machinery and equipment, it may be, see, I have just taken these figures, like 1 lakh I have taken for civil and development. Machinery equipment I have taken 7 lakhs. It depends on the scale of business. You want small scale, medium scale, large scale. So these figures will change accordingly. Every expense will change according to your scale of production. And then preliminary expense, that is formation of company, you like registration expense. Suppose you are floating a company, you want to work through a company, then it involves a heavy cost for registration of company and all, issue of shares and all. These are just general idea to bring in existence your company or firm. Whatever expenses are there, that is called preliminary expense. So total here is I have taken is just to understand, this is just illustrative. Total our capital investment to start with on rental land is 9 lakh rupees, suppose. Now this is, we have to, in our project report, we have to first show the capital investment. Then we have to come to point number B, is working capital, because one time expenditure is there. Now we need, what is working capital? It is the finance required to run your day-to-day business. And this is very important because it has to be maintained throughout your business. Until and unless you carry on your business, you need working capital. Means day-to-day running of businesses can be made by working capital only. What all you need here, the illustration says, suppose you understand it, raw material you need. See, first you understand this is what we call cycle of working capital. That is very necessary to understand over here. That is, we just take operation cycle, we also call it as operation cycle. What does it mean? Operation cycle means, first you understand why we say cycle, why this word comes. Suppose you start production today, so it takes time of 2 weeks here, because I have taken example of 2 weeks. Suppose it takes time to 2 weeks right from getting raw material, washing it, cleaning it, drying it, grinding it, packing it. It takes 2 weeks, and then another 2 weeks it may take to get it sold. So your whole capital money is involved. First rupees 1 to first investment in raw material, it will be turned into cash after 1 month averagely. You will, after selling, you will get again your cash. First you invest, so your cash gets converted in raw materials, in labor charges, expense also, whatever. And then you sell it. So it may be sometime cash sale and sometime it may be on credit sale. So I have assumed here 2 weeks. It may take 2 weeks to realize your sales amount. So that way you have to think on everything, how long it will take to get my production ready. It may be 10 days. I have taken here 2 weeks. And it can be 10 days also, 1 week also, depends on automation, your nature of machinery. There may be manual machines, it may take more time, and automatic machines may take less time. So accordingly you take calculate these days. And amount you invest in, suppose raw material, I am investing per week, my need is of 1 lakh rupees. So for 2 weeks it is 2 lakhs. For labor charge at 2 weeks I have assumed 50,000. And for finished goods and data, now suppose 2,50,000 is invested. Now suppose it takes time for to be realized. Matlab 2,50,000 I affected my sales, and but sales amount realization, my money is actually coming to be back me after 2 weeks only. So that's why we have to take 2,50,000. My money is stuck still. I haven't got. After 2 weeks only, I will get my money. So we call it debtors. Debtors will amount to be receivable parties to whom we sell our items. So it is 2,50,000. How we have to show in working capital, that I'm showing. Now for other expenses, salary for 1 month, suppose it is 80,000. Consumables, other required things may be 20,000. And lease rent, because I have shown here land as on lease, so rentals of that is per month, and other expense I have taken here 50,000. So this way my working capital, to please pay attention to first project report. First, this project will be shown like this only. So my total working capital in starting I need is 6,50,000, and my here 9 lakh is capital investment. After that, I think I am clear here. So to continue with total project cost.
For their reference, whenever we are talking about, yeah, I am audible now.
Is there?
Whenever we are talking,
yes.
Whenever we are talking about the working capital,
yes,
we assume that this will go for a month or 6 months or 1 year. Best time.
No. Working capital, yeah.
Just for
yes.
our student,
yes.
Our students actually, I am making them to clear
yes.
this particular concept. You need to think for the process actually, the cycle of the process.
Yes.
The input is coming, then you are processing it, and then the output is there. So the whole mechanism, the complete cycle, you require a fund to manage that. And as per that, actually, you prepare this working capital, not as per the monthly basis expenditure.
No. Always working capital cycle. That means raw material, its production into finished goods, and it's a sales effect. Total time period is, that is working capital cycle. Production cycle also we can say. So now earlier this slide was okay. Now total project cost in project report is coming to A plus B, that capital investment plus working capital is 15,50,000. So in short, I need for this small scale startup ke liye, for a small entrepreneur, or medium, I can say 15,50,000 needs in starting to start a business 15,50,000. This is what our project report shows. And how it will be financed now, it's up to you. Here I have taken what banks need at least. First, let me explain this. What banks need, at least here I have taken here 20% only. Please see my cursor, 20% only. But they also insist for your own contribution to be 25%. To be 25%, but here I have taken 20%. To MSME, they consider 20% only also. So out of this 15,50,000, 20% is 3,10,000. That is, it should be self money, self contribution, or through equity. If companies are there, they raises through floating the share, equity share capital. And then term loan, suppose for capital investment, 80% only they will finance, because earlier there it is 9 lakh, 9 lakh or something. Let me check. 9 lakh, yes. And 80% of that is 7,20,000 only bank will finance. And your CC limit is 6,50,000. 80% of that 5,20,000. That much only bank will finance you. Rest 20% has to be contributed through your own management. So this way our total 15,50,000 will be made out. So that this is the gross project report. In starting we have to submit to our bankers. They finance accordingly. I think I am at present, at this gesture, I am clear, sir. Everybody, any query, then I am always there. Pradeep ji, if there is any query, you please read it out, because I am not able to read it. It is not visible to me. So
No,
to
no, of course,
continue with,
you are very much clear. You are very much clear.
now
Proceed.
again, to continue with, now what happens, this is the first project report, but this working capital requirement is constant. So this money has to remain with us constantly. For that, banks want us every year to submit this project report, and again for further 5 years also they want. Suppose they renew this limit. Once suppose they have sanctioned you 6,50,000, fine, 5,50,000, 80%, whatever I told you, and they finance. But for that, every year you have to submit your balance sheet and profit and loss for getting it renewed. Means renewal. That means you again want that 5,50,000 of working capital to be maintained. For capital investment, there is installment because it is given in the form of term loan. So every month you have to pay for that, and one day it will be so that it will be squared up. Your that loan will be paid off fully. But working capital need is always constant there. In fact, it keeps on increasing also. If you are suppose increasing your business, creeping, you are constantly trying to increase your sales. So accordingly, you have to every year you have to submit your profit and loss balance sheet at the year end, whenever you want to increase your limit. It depends. But before that, you have to understand in that situation what you are supposed to submit to the bank. Then first you understand what is working capital. Now again, working capital, there I explained in project report first how you have to take put in all the figures and apply for your finance. Now for continuation, for working capital renewals, first you understand what is working capital. Working capital means funds required to meet the day-to-day requirements for business and operation. It is derived by, very important, current asset minus current liability. Whenever I have given little letter on my balance sheet format, current asset minus current liability. So now understand, we have to understand what is current asset. Oh, and again, one more line to be understood for working capital is what is current asset and current liability that are converted to cash inflow in one operating cycle or maximum 1 year. See, Pradeep ji, you were saying na ki 1 year or something more. Always for current asset, we have to understand it very well. Ki what is current asset? Current asset means, you know, that again I will be coming what are the examples of current asset, but you have to just here read this what I have written. Ki whatever assets are there, they get converted in either one operation cycle, I have taken 1 month, or maximum 1 year. Beyond that, it will be not be a current asset, because it is very necessary to understand current asset. Bankers only accept for working capital as current asset only, they accept. Other asset they don't agree with and they don't finance. So just try to understand that it should be realized within the span of 1 year or less. That is your operation cycle, means every 1 month your all debtor should be realized. Jo credit sale pay, what I told about the debtors. So this is how, that is a cycle, operating cycle. But maximum, some business may have 1 year time span also, so maximum 1 year they allow it. And what are current liability? They are cash outflow in one operating cycle or maximum 1 year. See, now again, now the example, suppose balance sheet, I told you, okay, I will show in balance sheet. Suppose there is balance sheet of Messrs XYZ. Now, what is liability? Balance sheet, how generally the format is? Here, liability side it is asset side. In asset side, we first mention fixed asset, long-term asset like machinery and all, land and building, anything like, which is not current asset. Then I have not mentioned here, it comes investment. Here it has to be written, I forgot it. Then comes current asset, because my concern is here to show you current asset. For working capital is a permanent requirement and to be submitted to banks. Hence, we have to understand it. So current asset is, it may include inventories. Inventories means stocks. It may be raw material, it may be your finished goods, it may be even your work in progress. And debtors. the receivables from parties to whom we sell, and cash and bank balance. These are some instances for current asset. And what is current liabilities and provisions? Is creditors. Creditors means from whom we purchase our parties, to whom we have for raw material, to whom we have to pay, no, that is creditors. Bills payable, there may be many bills other than raw material. We have many expenses, other expenses. If it is not paid immediately, we get some credit from them, then it is called bill payable. And outstanding expenses, maybe like salary may be outstanding for after 1 month, even 2 months also people pay, like that, means outstanding expenses. So this is these are the categories. You can bifurcate your all affairs in liability side and asset side. I think balance sheet general idea you got it, because main concern is current assets and current liability. Always these figures only bankers total up and check. Why I have mentioned here, it is very important. Just we will see it in next slide. Current asset includes stocks, inventories, debtors, receivable, cash and bank balance, loan advances, earlier I mentioned, and trade also. Current liabilities also earlier I mentioned what is include. Taxes payable also it includes. Creditors accruals also. It you will get to know, because you need not go much in this, because this is prepared by chartered accountants. They, once you will go with your bank statements, your bills, voucher, sale, purchase, they will prepare your balance sheet. So need not worry, but basic thing you have to understand it. Why I am stressing on this working capital? Working capital may be of two types: positive working capital and negative working capital. Working capital, you got total of all those items I mentioned in current asset, less all those items mentioned in current liability in earlier slides. You just deduct and just you check it whether it is coming in this ratio. This is very, very, very important. Why, I will just again explain what is positive working capital. Means a company is well enough. It is not a good sign. Positive working capital means you may have very much stocks. That means you are not affecting sales. Your stock is lying idle. Or you may have higher side of debtors, means you are not realizing your money in time. Then also your working capital may be positive, and you may have more cash and bank balances. Then it means you are not utilizing your cash and bank balances in proper way. Your money is idle, it is not earning income, whereas people have invested in your company to earn profit, but you are not making best use of your money. So positive working capital is not a very good sign. Just keep in mind this. Again, further I am coming. Now, what is negative working capital? Means company is unable to meet its short-term liabilities. Means what necessary expenses, you do not have that much fund that you are able to meet your necessary expenditure to get production and to run your business. It is very, very alarming signal. It is much more dangerous than positive working capital, because your company may or your firm may come to an end. You may become bankrupt. So in any case, you should not have negative working capital. Now, how it comes negative working capital? Current asset minus current liability, you just check it, or just get the ratio. Current asset, suppose my total debtors, stocks, and cash and bank balance total is coming 1,25,000. And my total liabilities, like creditors to be payable and outstanding, is suppose 1 lakh. So 1,25,000 upon 1 lakh will come to something 1.25:1. Am I clear, dear students and whoever is listening? Am I clear? Pradeep ji,
Yes,
at
yes,
least
yes.
I need your nodding. Here, so this is how we arrive at current working capital, current ratio. Actually, I have written here ideal working capital ratio, that is also called current ratio. That is very, very important. Bankers only see that only. Your See, 1.25:1 in my what the example I had given. But bankers want a business should have this ratio, means 1,33,000 assets, current assets, and ratio should be like this. Then 1 lakh should be your current liabilities and provision. This is the ratio. It can be of any figure. You have to just find out the ratio. If you are not having this ratio of this percent, then banks object. They raise queries ki why you are, it means you are not running your business properly. You are not again realizing your debtors or receivables are not effective. Something is there that it is in not a healthy position. So it is this ratio is a benchmark of healthy position. It may go to 1.40 also, but should not cross 2:1. That will become positive working capital. That it means bank will say, you have enough money, you have enough receivable, why you want money from me? They will always object. So they will never finance your working capital. In fact, they will insist you to pay back your whatever limit is there. Already you have withdrawn the limit. You have enough money because you have very sound ratio. You have enough money. You now pay back my dues from banks. So always you have to, if you wanting to seek this loan from banks as working capital, you have to just means check out that. And this is also a check on your business dealings, whether you are in proper cycle or not, whether you are working, you are trying proper effort for getting your money from your parties. Means sometimes it happens ki we don't try, the parties don't pay, because you have to be active in business. That's why also bank has made this percent as ideal percent. It means you are looking after your business satisfactorily. So just I think I am clear ki what is current, what is working capital, what is current asset, what is current liability, and what should be ideal amount and ratio that will make you enable to get finance from the banks. Otherwise there will be objection and finance will be almost that sometimes they get it cancelled also. So I think Pradeep ji, I have explained the general things what one should take care while applying for the project report, as well as for in continuity for working capital, because working capital renewal is every year. Every year we have to give our balance sheet, what I had here like this, whatever who your firm's name is there, and in that balance sheet this current asset and current liability figures have to be in proper ratio. If ratio is not proper, bank will always object, it will not renew, and it may reduce your limit amount also. It is very, means banking disciplines are very strict. That's why we have to be vigilant while doing business. So I think today's session was for understanding this working capital, and I have explained reasonably. If any query is there, do ask me. I think
Just,
I'm
just
over
I
with
have
this
one query,
working
ma'am.
capital. Yes.
I have one query in regard to the current asset.
Yes.
Whenever we are talking about inventory as a current asset,
Yes.
all this raw material to be counted or accounted as an inventory
Yes.
or not?
Raw material, yes. Inventories, I have written. Inventories meant it includes raw material, stock of raw material, work in progress also. Suppose you are producing, suppose haldi powder. So it may happen that some haldi is lying in dry to be in coarse form. It is not finally grounded. It may be in coarse form. So that will be called work in progress. That haldi powder will be called in work in progress. That also, why we need to evaluate this, because on 31st March, balance sheet is prepared as on some date. So, and in general, banks may ask you balance sheet on any date, but in general, for income tax filing, we have to prepare for it for 31st March. For on that date, it may happen that it is not necessary that your production may either in raw material form or finished form. Some items may be in work in progress form also. They may be in machine, lying in machine, or in course form, or not in finished form, but not in raw material form also. That is called, and that entrepreneur has to just approximately value that this much is the cost of my work in project, which is lying in machines or somewhere in process. So all these form inventories, raw material as well as work in progress, always there in manufacturing. Work in progress is always there, and finished good, which is pretty packed and ready to be sold, and unsold stocks. Yeah, it
So all
includes
three are accountable towards the inventories.
inventories. Yes,
So
and it is part of your current asset.
current. Got it, got it. Just because students are very raw or very fresh, they didn't know actually exactly. They are considering only about output, which is being prepared.
No, sir.
And that is why
Actually,
I asked this particular question.
very important, because in fact, I haven't covered here detailed project report. You do go through, because there are means on YouTube also, on Google, anywhere you search, or some schools are there, each and every item, like how production takes place. First, when we install machine, we may not utilize fully that machine. So in project report, we have to mention that also, at 50% capacity we are producing, or at 60%, because in starting we may not use our machine to the extent of 100% capacity, because we do not have that much finance. We may not have, some may have, they can use it. It depends on your capacity and your resources. So we have to take all those factors, and we have to mention that to our bankers. At this capacity, I am going to have this much ton of production, having sales so and so. Here only, because I had to explain the working capital concept, because it is an ongoing process. Every year we have to, for renewal, consider this. I have covered in this. Otherwise, project report is very technical and finance, and I don't think, even though I will try to explain, or in some other lecture someone will try, it is difficult. Leave it to the professionals only. Project report, like chartered accountants, leave it to them, or some the other experts also prepare finance report. So leave it to them, but you will have to ready with data, then only they will prepare. You will have to say that I will be using my machine for 50% capacity, then accordingly he will be making your project report and submit to banks ask everything. Which machine, what is the capacity of machine, how much it will produce per day, that machine supplier will also give you. So accordingly, you have to be, being an entrepreneur, you have to be ready with everything. That means all the details, what will be your production, what will be your consumption, what will be your electricity requirement, how much labor you will be needing, how long it will take to produce. Machine, I told earlier, automatic machine takes less time, manual may take more time. So this is how everything has financial effect. The one single word you will say, that will have some financial effect, that will be taken care by your project finance report. Whoever do, your professional will take care of that. But you have to be ready with those things. But you need to know ki these things are there. I have to keep in mind all these things. Any
Thanks,
further,
ma'am. So,
anything
ma'am,
else?
if any other query is there, please write it on the chat box.
You can also, Pradeep ji, anything seeming like
Only thing, no, of course, I'm very much clear about how to be go with working capital. Only thing is this particular session which we are doing today, because I have given the assignment to on the scene, and they need to understand whenever they, even I have given the format to
yeah.
on this, that this format is to be actually made.
Main cheez, current asset, and because see, balance sheets may run to two pages, three pages.
That
But
is a
basic
different part.
classification is this only. Here, one thing below this fixed asset, investment has to be mentioned. This I couldn't write. Now, no issue. That doesn't matter. Basically, for working capital, understanding of current asset and current liability is very important. That's why I covered that only.
A specific format I have given to all the students to prepare their assignment. And that particular actually the format is having a liabilities and asset. We are not going for balance sheet because they are very raw. They might be taking it in otherwise, or there can be mistakes from their end. So we are not
Yeah.
that.
And
Yes.
this can be, balance sheet can be prepared by tax professionals or chartered accountants only, or some accountant may also, accountants are there, he may also prepare balance sheet. Just ask to them your balance sheet in this form, because everybody now installs tally software and all. There also they give balance sheet. When you click, you ask for that. So you have to be somehow, either through some accounting software or through some accountant or tax professional or CAs, you always have your prepared your balance sheet in time, and just have the analysis of this current assets and current liability, how the ratio is going on. If it is adverse, work on that. Suppose one more example I would like to, suppose your current asset is your ratio is coming 1.5:1, then you work hard to just convert your get realization of your debtors or inventories. You just sell it fast, and whatever measures you can take to make it ratio to 1.33:1, and explain to your banker, sir, although my ratio is not good on 31st March, but see, after 15 days it is in good position because I realized my money or I sold my inventories, like that. So you have to be ready with this current asset and management of current asset and current liability. It has, because it has some cycle, time span, it takes time span to manage, and you have to understand the way I already explained in my slides. First you understand the cycle, how you, suppose this inventory is there, and so how this, when this inventory will convert in cash and bank. So see what is cycle. Then again this cash you will buy raw material. This is like,
That
so
is why.
this is
That
the
is why the
circle. Yeah, this
cycle.
is the circle. Yeah,
Cycle is to
cash
be.
to cash. Yes, cash to cash.
Cycle is to be considered here whenever we are
Yes,
talking about the
cash
working
to
capital.
cash. Yes, cash to cash. You get cash and bank from either from loan or your own contribution. You buy in machinery, you buy raw material, then you again convert it to cash by selling your product. So this cycle is called working capital, and it is reflected by this balance sheet item. And you have to always maintain your current ratio 1.33:1. Try to. This is the best and healthy position of any company or business. So with this word, I end today's this session of understanding of working capital. Really, it is very important, and in gross manner, in very illustrative manner, in short form, I have made you try to bring it to you people. If you have any further query, you can always ask Pradeep ji through Pradeep ji, or my number is also there. If you have any query. And thank you so much for the organizing team and participants for giving a patience hearing. And Pradeep ji, of course, and whole other associates also for giving me this opportunity to just share my thoughts on the topics given. Thank you so much.
Thanks, ma'am. And it was really, it is really valuable to know about these learnings. What is
Actually,
exactly
Pradeep ji,
the
it is,
balance sheet?
yeah, Pradeep ji, actually, it is very technical and
Very much technical. That is why we
yeah,
did madam, three
it
sessions on
it
this.
is job of VCAs only.
I know.
But you can understand your position, balance sheet, always keep it in front of your, you will never fail in your business. I can bet it.
See, like in our school days, we keep our report card in front of us.
Yes.
Where we are lying. And
This is your offense.
this particular exercise, that is knowing your liability, knowing your asset, knowing about your working capital, and of course the balance sheet, gives you the idea where you are lying. And that's why we took 3 sessions on this.
Yes. We should have
on understanding working capital.
Yes.
So thanks, madam, for being with us, supporting us. I know your time is precious for a day, and you have other commitments. So, but I do appreciate that you acknowledge that, okay, this is to be done, and today's was the date actually we have decided.
Yes. 5 o'clock I have another meeting, that's why I told you.
2 weeks beforehand we have discussed on this, that we will be doing this thing. So thanks for sharing your
Thank
insight.
you for the opportunity. Thank you, everyone.
I'm going to close the session. Thank you. Namaste.
Yes.